Good morning and welcome to Stock Market Today for Wednesday, December 18th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. It gives you daily stock ideas for you to consider. It hits your inbox every trading day before the market opens. So U.S. equities closed higher on Tuesday in a quiet day of trading. At the sector level, discretionary, financials, and utilities led, while REITs, technology, and healthcare underperformed. Treasuries were slightly stronger across the curve. The dollar was flat against the yen and the euro. Gold was roughly unchanged, and WTI crude rallied by 1.2%. WTI has been fairly strong of late. As we get to the desk this morning, futures are slightly higher, with some attention being paid to the earnings report from FedEx last night, which missed expectations. That stock is trading lower in pre-market trading. Asian markets were mixed overnight. European markets are mostly higher. Treasuries are stronger across the curve. The dollar is stronger against the euro, slightly weaker on the yen cross. Gold is up 20 basis points. And WTI is giving some back, down 90 basis points after data out after the close yesterday showed a surprise stockpile build. So what does it all mean for the structure of the S&P 500? Well, not a ton has changed over the past few days. Record highs for the S&P 500 again yesterday. That near-term support level is still in the 3050 to 3100 range. What I will say is that the major market ETFs are overbought by our work. And what that means is we have a proprietary overbought, oversold indicator that's more sensitive than the RSI, designed to tell you if a stock or an ETF is overbought or oversold within the context of its existing trend. And whether I'm looking at the SPY, the Qs, or the IWM, the major market ETFs are overbought by our work. RSI is in bullish ranges, all right, so longer term kind of trend confirmation. We are in bullish ranges for the RSI, but that small divergence does remain in place, right? Local highs for the S&P 500 not being met with a local high by the RSI. So what does that all mean? To me, again, as I said yesterday, you calibrate your aggression is what that means. Maybe if you're looking for bullish ideas, you might give them some time to set up. But from a trend perspective, indicators continue to support the rally that we're seeing in equities, especially this RSI, especially the fact that on that post-Thanksgiving pullback, we didn't get below 50 and then promptly worked higher with the market. Add to that the fact that Chaikin money flow is bullish. The indicators line up from a trend perspective. Now, what I will say is indicators are confirming the trend, but maybe in the near term, we're overbought, and obviously we want to pay attention to that divergence that's playing out here in the S&P 500 currently. Let's turn to our market in a minute. What am I writing about in my note today? Well, stocks move higher in quiet Tuesday's trading. Sentiment has become more greedy as equities trade near the highs. On Wednesdays, we take a look at sentiment, and the sentiment indicators that I watch and write about in my note on a weekly basis have all become more greedy or less fearful. As I said, major markets are now overbought by our work. Metals and mining begins to outperform the SPY. That's an interesting concept that we're going to take a look at a little bit later on in this show. And as I said, futures do point to a slightly higher open today. From a power bar perspective, not a lot has changed, right? Everything's still skewed in favor of the bulls. The Dow adds 12 basis points yesterday, 8-4 bulls to bears. S&P 500, 125 bulls for 77 bears, as they were virtually unchanged yesterday. The NASDAQ virtually unchanged as well, 25-13 bulls to bears. Small caps, nice outperformance on the day. Small caps, 748 bulls to 241 bears based on the Chaikin power gauge rating in the small cap IWM ETF. Bonds downtick slightly, sending yields higher. And according to the Chaikin power bar, as I said, small cap stocks and large cap stocks are bullish. Major markets across the board are somewhat mixed, but the main ones that we're looking at are all still skewed in favor of the bulls. Let's take a look at our stock of the day now. And this is International FC Stone, not Intel, INTL, the ticker symbol that we're looking at here. Closed at 49.68, up 2.39% on the day. Has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very strong price volume activity, as well as positive expert activity. So when we take those 20 factors, 5 in each of these 4 categories, we roll them up and we come out with our very bullish rating. We have a strong trend above a now rising long-term trend line and a strong industry group. Financials, capital markets, we've been talking about them for some time. Now, what we have here is a massive move higher by INTL following this earnings announcement that was roughly in line. That has led the stock to now become an outperformer. It's new leadership following this move higher, right? So our very bullish rating now met with an outperforming stock. And obviously, a series of strong days with closes towards the higher end of the day prompts money flow to move into the bullish to a bullish reading. Right now, the stock is overbought. Obviously, we'd have a big run here. What you do have from a chart perspective is a breakout through this $45 level. So I think if you're watching this name, you want to wait for a bit of a consolidation that holds above that $45 level. Kind of let this overbought, oversold indicator work its way down towards an oversold condition, and then all else being equal, key phrase there, potentially take a look at INTL. All else being equal would mean the rating stays bullish, still outperforming, and money flow remains bullish. But I think this is an interesting name. I like breakouts. I like to keep an eye on them, see how they consolidate, especially when that breakout is induced by a fundamental event such as an earnings announcement, as is the case here with INTL. Take a look at that one. Add it to a bullish watch list here today. Let's look at our sector tracker now, the movement of the major sectors over the last 5 days. Technology at the top of the list, where it remains. We've been bullish on technology. We continue to be bullish on technology. It is the largest weight in the S&P 500. And what's amazing about that is a lot of the big names that you think about in terms of technology, names like Amazon, names like Google, are not actually part of this technology sector, right? Amazon is part of consumer discretionary. Google, part of the comms group down here. So tech's doing well and continuing to do well. Energy has had a good run of late. We've been talking about energy a little bit. I showed you XOP yesterday, getting a bullish power bar ratio. Not quite there yet from a trend perspective and a relative strength perspective, but we need to start to sit up and take a little bit of notice at some potential shifts in energy. Utilities at the top of the list, which is kind of surprising to me as yields continue to back up, and the fact that real estate and utilities are decoupling might be something we want to take a glance at. Discretionary and the retailers had a good day yesterday, and if Amazon's going to start to work, discretionary could continue to work higher. Middle of the road, financials, materials, and healthcare. Financials and healthcare joint technology is 3 of our favorite sectors of the market. Towards the bottom of the list, but still go up over the past week of trading, comms, industrials, and staples. And real estate continues to be under pressure. Under pressure once again yesterday as a lagging group, down over 2% over the past 5 days. That is a trend that we think is likely to continue. It has gone from a market leader to a market laggard, and XLRE actually now has a bearish ETF power gauge rating here at Chaikin Analytics. Let's take a look at our industry in focus today. This is one we actually looked at last week from a chart perspective. The industry in focus, like the stock of the day, is auto-generated, so let's just analyze it in real time as it's presented to us. Pharma services, which over the past 6 months has been a slight outperformer relative to the S&P 500, eking out the S&P 500 by about 43 basis points. But its power bar ratio, which measures future potential, is strong. 13 bullish or very bullish stocks for 5 bearish or very bearish stocks, currently ranked number 7 of the 21 subsectors that we watch, having moved up 1 slot over the past week. Now, I've talked about Jazz. I've featured Bristol Myers in a lot of my work of late and some of my media appearances, Mylan as well, but still an underperformer. These are all names with very bullish power gauge ratings, but remember, we want to pipe in and see if the stock is actually leading or lagging. In the case of Mylan, it remains an underperformer. But let's take a look at the XPH, the SPDR S&P Pharma ETF. Has a bullish Chaikin power gauge ETF rating and is in a strong trend above that rising long-term trend line. What really started to get us excited about pharma was the relative strength, right? We were watching pharma go from intensely underperforming to less intensity with the underperformance and now outperforming. So we have a bullish ETF that is outperforming the market with solid money flow. So the kind of the same analysis that we run through on stocks can be applied to the ETF level. What I will say is that XPH is closer to overbought than it is to oversold, so just something to keep in mind. But we continue to look within this industry group for bullish ideas that fit the process. Let's look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. Albemarle up nearly 4%. Didn't see anything company specific on the stock yesterday. We'll note that they did have an investor meeting last week. I'm not sure if that's a lag effect, but the stock was higher on the day yesterday. Netflix gave us some subscriber data, and that sent the stock higher by 3.7% on the day. Didn't see anything on Mosaic, MOS, to send that stock to the plus side, 3.44%. AAP, I said discretionary had a good day yesterday. Retailers driving a lot of that. AAP up nearly 3% on the day. Nothing company specific driving trade there. And XEC up 2.9%. Again, nothing company specific to speak of there. The loser side of the board, there is a common theme with three of the names: Cardinal Health, CAH, Amerisource, Bergen, ABC, and McKesson, MCK, all down over 3%. Cardinal down nearly 4% on the day as the drug distributors came under pressure. Now, what I will say is that McKesson does have a sell-side analyst meeting today, so obviously some commentary there, and takeaways could drive trading on that stock in the near term, but the drug disty names came under pressure yesterday. CenturyLink, CTL, down 3.3% after it caught a downgrade from one of the larger sell-side banks, and SBAC down 3%. Nothing company specific to drive trading there, but part of the real estate group that we've been highlighting here as being under pressure of late. SBAC down 3.02%, has a bearish rating at Chaikin Analytics. So let's get into the charts. What am I talking about today in my note? Sentiment becomes less fearful / more greedy. I said on Wednesdays, we look at sentiment. You've seen these charts before, but here it is at the top of the panel. The CBOE, equity options, put-call ratio. This is a 13-period moving average of that ratio to kind of alleviate some of the noise. And you could see that while not at an extreme, as we were a few weeks ago, we are starting to move towards a position again of less fear / more greed in the marketplace as that ratio moves lower. When, indications down below kind of the 0.6 mark tell us that there's some froth in the marketplace. The flip side of that is when we see this ratio, or the moving average of the ratio, move over 0.75, that's a sign that there's probably too much fear in the marketplace. And you can kind of line up these peaks with the troughs in the market. I find that it tends to work better at the peaks. At the same time, the VIX has moved lower, right? After that post-Thanksgiving dip in the market, the VIX spiked. We're now getting back towards the 12 mark for the VIX. So something to keep an eye on again as fear starts to come out of the marketplace, with the S&P 500 moving to all-time highs. I will add here, I included in my note, it's not on the slides here, I also look at the CNN Fear and Greed Index. I like to look at that one because it encompasses 7 different market-based readings of sentiment. Rather than survey-based, they're market-based, i.e. what are people doing with their money, right? I like to pay attention more to what people are doing in the marketplace rather than what they're saying. And the CNN Fear Greed Index moved to a rating of 85 this week from 65 last week, and is now in a position of extreme greed. Metals and mining now outperforming the market. Take a look at the XME here, the SPDR S&P Metals and Mining ETF. I'm featuring it in my note today. And what we saw here was a downtrend that gave way to a consolidation. Now the ETF has retaken the 200-day moving average and is breaking above resistance, right? Old resistance could become new support. I've highlighted a bit of a support zone here between $28.50 and $29, which so far is being tested and holding. All the while, through the back end of this consolidation, the RSI was setting higher lows, to the point where the RSI has now shifted into bullish ranges. Most recent move higher actually producing an overbought condition for the RSI, and XME beginning to outperform relative to the market. At the same time, XME has a very bullish Chaikin Power Gauge ETF rating, 9 bullish stocks for 4 bearish stocks. So that leads us to believe that this recent outperformance is likely to continue. This is an area of the market where we want to start looking for potentially bullish ideas that meet the process. And as metals and mining move higher, emerging markets are breaking higher as well. Taking a look at the EEM here, the emerging market ETF, right? You see a topside breakout through resistance as XME relative to SPY starts to outperform, so starts to move higher. So as this ratio moves higher, we would expect emerging markets to continue to move higher because I've given you the correlation. It's 20-day correlation at the bottom. It tends to be positive. So if metals and mining are outperforming, we would expect emerging markets to continue to do well for this breakout. That's going to wrap it for today. I'll be back here tomorrow. Have a great Wednesday, everyone.